In late March 2025, Micron Technologies CEO, CFO, and management team held a conference call with Wall Street analysts, and they provided great insights into the latest developments at the company. I've read through the entire transcript of that investor conference, and I've highlighted the big picture items that investors need to know, the big takeaways from this latest update into Micron stock. That's what I'm going to share with you in this video and highlight what it means and what's going on for Micron Technology stock.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the good items that came from Micron's latest quarterly update is the company's high bandwidth memory market looks to be larger than they initially thought. And this is the second time that they've increased the target market opportunity in as many quarters. So in terms of the HBM TAM, which stands for Total Addressable Market, yes, this is the second time we have increased it. And it's coming from a combination of more robust shipments and a faster move to 12 high, which is the latest generation technology with more components and a higher average selling price per component. So this is working out much better than Micron Technology initially thought. And that's what you like to hear. It's especially important because Micron Technology has increased its capital expenditures in updating and expanding its manufacturing facilities at the billions and billions of dollars. And so this incoming data is also reassurance that those big capital investments are going to pay off better than the management team originally thought. So when they went into it, they were thinking they had a total addressable market opportunity of a certain number, and they decided, well, that opportunity is sufficient enough for us to make these big investments, these multi-billion-dollar investments. And now the data that they're getting back is that, whoa, the opportunity is actually bigger than we thought. And then they said that again, wait a minute, it's actually bigger than we thought again just a few months ago, right? So they're progressively expanding the number, the total addressable opportunity that they initially thought. And that's great to hear, right? That's what you like to hear. It's almost the opposite of what electric vehicle companies are going through, right? Electric vehicle companies in 2019 and 2020 and 2021, they made these massive billion-dollar investments in their manufacturing facilities, in their technology, in everything that goes along with expanding into electric vehicles. And now, fast forward to 2024 and 2025, the market opportunity is much, 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 much smaller than they were forecasting when they made those investments in 2019, 2020, and 2021, and even before that, right? The consumer adoption rate of electric vehicles is so much smaller than was being forecast in those prior years. And so they're scrambling to try and get out of those investments, and those companies some of them are going bankrupt. See, Fisker Automotive, Nikola Motors is on the verge of going bankrupt, and there's many, many more, right? So when companies make those large capital expenditures, it's risky because you're looking at an opportunity multi-years ahead in the future, and nobody really knows what's going to happen in the future. But when a management team makes these investments and they end up working out, they deserve credit for correctly forecasting future developments and preparing for those developments ahead of time, which is what you're seeing here with Micron Technology. Their investments in these capital expenditures look to be paying off much better than they had expected. And so that's the kind of thing you like to hear as an investor, not what EV stock investors are hearing right now. That's the opposite of what's going on. If you've seen me covering some of these EV stocks, it's the opposite of this. It's everybody is talking about, well, we thought it was going to be much larger, and now we're in this situation and we're trying to do the best we can, but we knew we messed up because our forecasts were incorrect. So the company also talked about their startup cost for this new technology, the 12 high bandwidth memory technology. So the management team saying that the startup costs are relatively modest, under 30 or 40 basis points, depending on what the revenue is, and as they sort of exit the year. And then those costs will increase as they increase the level of activity, particularly in Idaho and around our newest DRAM node. Those costs will increase through 2026. So this is a bit of not so great news, right? The first developments we saw with Micron technology was very good news, that the market opportunity is in fact larger than they anticipated. And these costs are not so great news, but they're also to be expected. Anytime a company is ramping up a new technology, the costs for starting up that new technology are usually higher, because you're not going to initially be producing that new technology at full tilt, right? You're starting off in batches. You're trying to learn what the mistakes are in the system, what needs to be improved, and learning from that, and then adapting, and then kind of growing and producing larger batches, which then lowers the cost per unit. We're seeing a lot of this with NVIDIA, which I just reported on about a week ago, how NVIDIA's management team, as they're ramping up their newest technology, which is called the Grace Blackwell, the CEO was saying, like, look, we went to a whole new system. And so there's learning that goes along with that. And there's a ramp up that needs to go along with that. And so the initial cost per unit to produce is going to be higher than what we had in our previous generation technology. And so this is true with almost every new introduction of technology. As it comes in, it creates an increase in the cost per unit. And then as the production ramps up to full scale, the cost per unit goes down. And so this is usual. This is not surprising, but it's something that Micron investors should keep an eye out for, in that the cost per unit production are rising in the near term. But if demand remains as strong as management is forecasting and what they're seeing, that should offset these higher costs, because then they can produce at larger unit batches, and those larger production batches will then lower the cost per unit of production. Hey everyone, we've got some exciting news to announce. We launched a private Discord exclusively for our channel members at the VIP Discord tier. It's your backstage pass to ask questions, share insights, and get direct access to me. Don't miss your chance. Limited spots available, so join now.